Good morning, everyone, and welcome to the European crossover webinar. And as usual, the Italians are late. They're even announced on the squawk, still waiting for Italian data. So it's never on time. You can see that right here. But let me see, we did have UK retail sales data that came in earlier. That was 2 hours ago and came in just a little bit stronger. Italian data, like I said, still hasn't even hit. And then nothing until we get into the States, which will get Canadian new housing price index, as well as retail sales. And that'll be it. And I'm not going to even worry about the Italian data. It's not worth it. Pulled up the wrong one. So let's take a look where we stand here. Dollar index is pretty much near these lows. They're just barely hanging on. If you look here at the euro dollar, we did see a pretty good rebound yesterday. Our bias chart yesterday was bias chart support yesterday was 1814, and the low was 1816, and our resistance for yesterday was 1882, and the high was, I think, 1881. We pushed a little bit higher, but we did adjust the resistance a little bit higher too, but we're still a bit lower. Key's going to be if we can close, I mean, not close, but if we can keep this 1870 before the close, then we'll be looking good there. Depending on what side of the market you're on. Hang on. Then we'll take a look at the cable. This was interesting over the last couple of days. I noted this in the analysis. So essentially, you had on Wednesday somewhat of a gravestone doji. Then you have here, which could potentially be construed as a hanging man. So at least I think that there's a possibility that we can go in and pair back from here. We'll see what happens. Obviously, going into the close, still a ways off. Take a look where we are with the Kiwi Dollar. That's been huge. We talked about 68.96 as a weekly close level. They are above that for right now. So that is interesting. Like I said, the weekly close level is 68.96. So if we hang up here, boys can open the door for them to go and certainly push higher. And then once again, getting back to the cash dollar index, hanging near these lows. We've talked about that. Is that and if they get down here to 91.94, I think that they'll just go on and hit that, and there won't be any bids. But we're a little ways off from that level right now. We'll go on and take a look at where we stand here on equity futures. And actually didn't update this here. Actually, that should be back here. There we go. Sorry about that. But you can see here yesterday when we had this, I was looking for a move into this zone, and we got that move into the zone. Then we dipped back and we reasserted ourselves. And what I did was I took the range as we broke, and then that 11,900, which was key down here to the bottom, and then just extended that. You can see that, and that gave us a target of 12,000, and they actually hit that to the tick. And then they paired back, and then they reasserted themselves. And I am a bit surprised that we're still up here at these levels. But I think that this is more about people stuck on the wrong side, because we saw that break. Look how Wednesday had played out. You can see here we rally up, then we went down, then we went up, then down, then up, then really down. And I think people felt, I myself would have thought, this is it right here. We'd be definitely heading lower. And I think that's what happened, is that we got people stuck. So here was Thursday. We extended that, into Asia and then into European Open. And then we turned around and rebound. And I think people just simply got stuck. And we just kept going higher, coming to here. And I'm thinking, okay, this is where they can go, which they did. And they did back. And we thought, that's probably all she wrote. We come back here and we push hard. And then we had that extension into that 12,000, and then we dip back, and here we are pushing up again. So I don't think, as I said before, I don't think it's a brand new leg higher, although that's where it's at. But then it's Friday, so that's what I'm saying. If you look, here's a little bit more compact look. That's on a 5-minute, but if you look on Wednesday, look what we were doing on Wednesday. Look at that. All this is perfect setup for really a good strong break lower. Look at that. We come down here, we rally up right into that trend line, that broken trend line, fall back down, make one more standing. Look, this is it. Come back, and it was just a day of indecision right in here. And then we break hard at the end of the day, and we extend it even further in European trading, and then we just come right back. And here was the key, the 30-minute. Here's that 11,900 I was telling you about. And once we got a 30-minute close above that, then it opened the door for them to go higher, which they did into that 11,960. Here's the deal, though. We haven't just sat here and just come back down to consolidate. We've actually held it up. Look at that. And they've held the solar exponential moving average, and that's still holding. So I think it's just about people that are stuck after this big old move. Look at this. And then a break lower. Thinking, I would have thought, man, this is it. Now we're finally going to break lower. Probably going to end the week much lower. And then look how we turn around and come back on Thursday. And I think we have people that are stuck. There are probably, I would think, some folks that are short, and they're probably content on staying short unless we got to close above this area here, which would essentially be like 12,050. Now, I did see, which they really essentially almost did, a potential rush to get to 12,030. We almost got to that area. Looks like we made it to about 12,015-ish or 16-ish. But once again, I think that, but the problem is that technically speaking, at least on a 30-minute, we're in a buy mode. And we got that, and it stayed that way. And we actually turned the SPOOs into a buy mode themselves also. Actually, I've kind of danced around if you look here on the SPOOs. And this is where we were yesterday. And I said, hey, look, if we get a 30-minute close with this 35.67, bears aren't going to like that. And sure enough, we got that close, and then it lit and took off. Then the S&P, which has actually been performing better over the NASDAQ for the last week, or maybe a little over a week, up until just now. You can see how much came back in here. And look at this, is kind of odd. It had broken down, although now the NASDAQ was holding up. So we are back below this 35.67, so it'll be interesting to see how it plays out. Keep an eye on that. Although I do keep the S&P right here. So we shall go on and see. With that, let's just go on and cover the news. I don't have anything on the Aussie dollar. Then, so I don't even really want to interested. I want to be honest with you. I don't even follow Bitcoin, but there wasn't another story. I mean, there is, but nothing in regards to the cable or the Aussie. So I usually read two stories. I'll just go through this fast because Bitcoin. I have no interest in Bitcoin. What's behind Bitcoin's rally? Is it an inflation hedge, a currency, or just another niche asset to take a punt on? Bitcoin is in the headlines, rekindling debate over its true role and the drivers behind its latest scintillating rally. Bitcoin, with a history of vertiginous ascents and steep drops, is close to laying out its record peak of near $20,000, being climbed almost 160% this year. And central banks unleash the printing process. We know about that part. Inflation hedge with governments and central banks in full stimulus mode. Lower volatility. Part of the gains may be due to growing acceptance of Bitcoin as a payment system. And that's it. And once again, like I said, not really interested. I don't follow even Bitcoin. So let's go and move into the dollar. So the dollar halts inside as the Mnuchin calls time on emergency funds. The dollar halted its slide on Friday after U.S. Treasury Secretary Mnuchin called it into some of the Federal Reserve's pandemic lending, dealing a risk rally and surprised investors who had counted on central bank support. The announcement damped a previously positive mood after reports the U.S. Senate Republican and Democrat leaders had agreed to resume negotiations on another coronavirus stimulus package. While Mnuchin's move was aimed at reappropriating some $455 billion allocated to the Treasury under the CARES Act in spring for other spending, some investors were concerned about ending programs that they think played a vital role in reassuring markets. The Fed also said it preferred that the full suite of emergency facilities established during the pandemic continue to serve their important role as a backstop. Investors have banked on the municipal liquidity facility being a reliable emergency lender. Without the MLF, the market won't collapse, but it will lack resiliency. Also, sound risk appetite. California ordered a curfew placed on all indoor and social gatherings and non-essential activities outside the home across most of the state. For over a week, the dollar has lost ground. The euro fetched 1874. Mentions this week's high of 1893. There's a feeling that at the end of the day, financial markets will remain solid and detached from the trouble in the real economy. A correction in the stock price was a natural gain. It was natural given the recent gains. For now, we have to see where the stock markets retreat will prove to be a temporary one, he said. The British pound won the defensive after the Times newspaper reported that European leaders will urge the European Commission to publish no-deal Brexit plans as the end of the year deadline approaches. Really, there's no news. That's what they're saying, just isn't even news. So, once again, just to cope over, not interested in the Italian data. We're looking at Canadian housing starts at 8:30 Eastern, along with Canadian retail sales. So that'll move the needle on the Canadian dollar. And there's no other U.S. data you can see here. Consumer credit confidence flash. That's Eurozone, but that'll be at 10 a.m. Eastern. So that'll be something to keep an eye on. That'll be at 10 a.m. Eastern. And with that, we're just going to move into the analysis. So the euro rallied back on Thursday as equities came back, challenging bias chart resistance. Resistance on Friday would be 1897, with support at 1828. And the high on this move has been this is 1890. This is 1891. Okay, well, still not bad here. And once again, these numbers, come up with these numbers in Asia during the Asian session when I do the analysis. Let's go move into the cable. So the cable tested the low side of before rebounding. Wednesday was a gravestone doji. We pointed that out. Followed by Thursday with a potential hanging man. Resistance on Friday will be 32.85 with support at 31.85. And let's go and cancel this out. On to the Aussie dollar. So the Aussie slid back on Thursday, closing, and what I meant to say is closing below 73 cents. I said, well, actually, it looks like it tried to close at 73. But no, it actually right here. So let's say closing below at 73. The pair has the potential to see a downside correction. Initial support will be 72.32 with resistance at 73.20. And I think people are just, with the exception of maybe the Kiwi, I think people are just got stuck in these positions. And it's just a matter of whether they're going to exercise stops, push it to exercise those stops. But I think that's more or less what we're looking at. But I can tell you what, on those equity futures, it looks like they did fool some players on that. I myself would have thought that we'd been heading lower. I did not trade Wednesday's action very well at all. I had a little bit of gains, and that was about it. And I was really frustrated, thinking, boy, this thing is now going to take a leg lower and be heading lower. And look, it came back. But anyway, looking at the Kiwi, Kiwi posted a potential hanging man. The key is the weekly closing level of 68.96. Support on Friday will be 68.53 with resistance at 69.28, or just a hair above that. So 68.28. And 69.28. And on to the dollar CAD. Of course, we have Canadian data this morning. So the dollar CAD closed neutral after trading in a relatively tight range. Support will be 30.28 with resistance at 31.02. And to me, in some ways, it's better just to look at the technicals, because that's what they move to, instead of trying to say, well, it did this, but really technically, you think about it, it's being lower, but it kind of came back, but then it finished lower. I just look at the levels. That's it. I mean, I try to put the analysis for the resistance as we come in today, and I do that last night, essentially, or usually it's late in the afternoon, or sometimes early in Asia, and so I just put in context how the market closed and where we kind of stand and where could they go to, and that's it. So I don't put that much. I mean, it's important that the euro turnaround came back, but even then, I think it's just able to stretch a little bit beyond that. Doesn't mean it won't, but that's why the resistance was 1897. And the 1882 did cap the market. I wouldn't say it was cap, but the high for the day was 1881. We had resistance at 1882. Now you look at how this market came back. I'm talking about the euro. So you have to give it a little bit more room to the upside. If I really thought we were ready to take off, then this would be more like 1912 or 1919. But I just have it at 1897. So let's go and move into the dollar peso. So the dollar peso closed below the pivot of 2023. The pair attempted to put in a minor bottom. If it's to hold, the bias chart support will be 2016 with resistance at 2033. Obviously still bearish. This has been one heck of a move here. This is crazy. So we broke lower. Look at this. We closed lower. We push them up high. We push them up low. We finish, in the middle, sort of a little bit lower than the middle. We break them hard. Then we come all the way back, only to just keep on going lower and lower and lower. And I heard, that was on Blake on the week ahead video. And he said that he had heard that they carted a few people out that got stuck on the wrong side. They got short looking for an extended move and got ripped. And I know that Amanda got long, so she did really well. But man, look at this. This thing has really been something else. That's what I'm saying. Now that and a move like this obviously deserves some. Wow, look at this range. The other stuff, I'm pretty much dispassionate about that. I'm saying I just look at the levels and then that's it. But obviously, when you're looking at what's happening in the dollar yen, you really have to step back and say, "Whoa, what does this move mean?" Because that's one heck of a move as we swung up, swung down, swung all the way back up, then just down, 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 down. But that being said, the dollar yen posted what could be an inverted hammer. That's right here. Support will be 368 with resistance at 404. Let's put that there. I try to look at the moves as I said in context, but I don't want to get too wrapped up in it. And it's better to just look at the technicals. And that's what I'm saying is when I say dispassionate. Obviously you can't do that in something like this, the dollar yen. But now we're going to move to the dollar index. The dollar index is just so dead in more ways than one. It doesn't even move anymore. Look at that. You can't try and make up something out of that. You just look at the levels. Actually, it's not even going anywhere. You can just almost use the same levels. But the dollar index closed modestly lower. Bias chart support will be 92.06. You see the 92.06 with resistance at 92.81. If we were to break beyond this, like I said, watch out. I don't think that's going to happen today. But I'm saying is I think once you get past 91, 94, I don't think they will defend it. I think they'll just rip it for a good 75 ticks. I've mentioned that before multiple times. So support today is going to be 92.06. And this might be a stretch, but in case things were to turn around, 92.81. And let's go into the Kiwi yen. Well, this hasn't really gone anywhere. You see that? We've just been stuck in neutral. This worked out really well. Remember, I think we may have expanded this. Yeah, we did expand a little bit lower in case it wanted to go down to 34. It didn't. It just kind of held that, but we'll keep the 34. But on the upside, we had 71.85, and it actually held and tried to push up a little bit higher. The key thing is it's above this area here. And there's your body close, 71.85. I'm not sure what it will try and do because we're just stuck in the middle here. We'll just go in and keep that 71.85. No changes there. We did pop up a little bit, almost to 72. Looks like went to 71.98. We'll keep that 71.85. And then we'll just move on to the euro yen. I mean, the euro pound. No changes here. None whatsoever. Look at this. We're just strapped, just stuck and trapped. Almost said combined together. Stuck or struck. But anyway, definitely stuck and trapped at the same time. So no changes here on the euro pound. Upside 89.68. And let's go on to the euro odd. So on the euro odd, we did kind of turn things around because look, we made it up here to the 63.17. Probably more about at the end of the week. They got going in one direction, so they pushed a little bit further. But you can see as quickly as they got to 63.17, they've come back in a bit here. So obviously you can see that it's a level. We'll put that as a resistance, but it's after the fact because you can see we've already come off. And support, it would just be this body close. But they've already had a pretty good turnaround. I'm not sure if they're going to push back down here, but that would be support, which would be 62.29. Obviously still bearish. And go to the Euro Kiwi. I'm just going to leave this as it is. We had 71.03. Right now, it's actually at 71.03. But you can see we're not going anywhere. Nothing's happening. And the upside is 72.06. So far today, the high is 71.89. So no changes here on the Euro Kiwi. We're just kind of dead in the water here. Let's go to the Aussie yen. We did stay below the 75.72. We had 75.87 as our high and no changes. Look, 75.79. So that's still keeping it in check. And on the downside, we had 75.44 and the low's been 75, looks like 75.40. So no changes here. We're just not even moving anywhere. Look at that. We're just dead in the water. So with that, we'll go into the guppy. Nothing here. Look at that. We are absolutely dead. 38.09, same. See that? Low, 37.21. Yesterday we got as low as, looks like 37.15, so not bad. So we're going to keep that the same. And then lastly, the starting odd. So we're not even moving. Look at the starting odd. We did have 82.12. We did punch them up a little bit higher. I don't think we're going anywhere. I really don't. I'll just stick with the high for yesterday, which is going to be 82.38. And on the downside, this body close here. They're holding up really well. They're in a super, super tight range. But the body close there is 81.48. And that's it. Equities are staying relatively quiet here. Looking at Apple, back up here to this 119. I had that on a super short time frame. Let's see, on 30 minutes. Look here, we're back to this level here that they ran out of gas with yesterday, which is 118.65. So we're kind of pushing back a little bit higher here. Let's go and look up at these on the 2-hour chart. And these markets look like they had the potential to go in and break lower a couple of days ago. Actually, when we're looking at, remember on Tuesday, and that's Wednesday, I thought the market was going to move higher, initially speaking, and then break lower. And it actually started the morning going lower and then started rebound. Then it had me befuddled. But we went up and down, up and down, up and down, and then we broke them late in the day. And then we saw that continued follow through, and it looked like it's curtains for equities. And here we've come all the way back. And I think, as I said, I think it's just more or less about people just being stuck. And I don't see anything happening here in equities in the pre-market hours. You can see here, we're just a little bit lower here. So I think in the futures, future equity futures, and we'll take a look here at Tesla and Netflix. We're just kind of stuck down here. We have rebounded a little bit here on Netflix, but there's not really anything that stands out. So to me, it just looks as if its equity futures are the ones that are having a problem and that are stuck, so to speak. And we'll go back to those. Here's the 2-hour on the NASDAQ. You can see here's that 12,023 I was telling you about. And they came close to it. They dipped back, but they're still holding it very well. And you can see here, look how they broke that trend line. And then they came back up here, and that way on this day, man, it looked like it was curtains. That's to say, it looked like, man, I can't believe this. I was wrong-footed. Now we're really going to extend this move and head down towards here. And look, we took a dip in Asia into Europe, and then we came back. And I think we just have people stuck. I think that as long as we don't close above 12,023 on a 2-hour chart, and that's what I thought that they could get to looking here, and I'm surprised. I still thought they were going to just roll over once they hit that 12,000. But when I was looking in Asia, I said, well, they may be able to make it to 12,023, and then it's probably a fade. But if you think about it, once again, Fridays can always be tough. Is what is it here that tells you the market's is a fade? It doesn't. It's in a buy mode. You see here, we flip to buy, and look at even the S&Ps. Look how they've ripped up here. You see here? So let's take the S&Ps on the 2-hour chart. If they can get above, well, really the key here is right there, which would be 35.80, call it 35.85. If they can get beyond 35.85, then you're going to knock some people out. I mean, they're not so much knocked out as much as they're just going to be stopped on there. And same thing here. I'm sure let's go and put this back here, there. See, once they broke this area, I'm sure it looked like it was curtains. You see, and then probably augured for a move down to about, I don't keep up that much closer to the S&P because it trades completely different from the NASDAQ, especially over the last week. As I told you, the last week and a half, it was actually faring better than the NASDAQ. Now it's kind of underperforming. But I would have thought, let's go and pull this down here. There. So this would have been on this break. On this break here, I thought we'd been going right there, just above, just almost up to almost at 3,500. And you see, I think we got people stuck. I think though there might be some people that I think that there was selling here, decent selling in equities overall. So I don't think anybody's going to rush back in to buy this. There might be some medium term players who are going to say, well, I'm down, whatever. But we would need a close. We would need a close above 35.85 to flatten some of these people. But I think there'll be others that will say, look, as long as we don't get above this area, probably like 36.20, I'm going to stay short. These are more longer term players that probably be looking for a more further correction. They may be looking down here towards 34 even or 34 and a half, and they're not going to be knocked out. But I think on a short term basis, there'll be players that if they get a close above 35.85, they're out. They're flat of their short position. But I tell you what, I myself, I would have gotten fooled with this one. And then look at the NASDAQ, like I told you, essentially it's that same move here. And I myself thought, man, they're going to be heading down here. And this really fooled some people. Like I said, that day that we were kind of, look at this, down, up, totally bullishly engulfs. Then we push a little bit higher. We close down here. We come all the way back up here again, and then we break them. And then we see some follow through. And look, we took it right back up here. So it's, to me, it's 12,023. You can see there's a little one right there. They might some people might just try and hang their hat on, which would be like 12,038. But to me, it's 12,023 that the market can go to. Whether it can close above it, I don't know. But I'm saying, to me, it looks like when they open up in the morning, they can drag them up to 12,023. But like I said, when you think about it, it's a Friday, and you have people that are stuck on the wrong side of the market from down in here. So when I think about it, I'm thinking, oh, that's probably a good level. That's where they get to. I don't want to be a buyer here, but that might be an area where we pull back. That could be true, but the problem is we're on a Friday. And when you look at that from a technical standpoint, what here tells you this market's going to pull back? Nothing. You see what I'm saying? We've come back here. You see the exponential moving average. They rallied up, and look where they come back. They hold the slower moving average. You see that? They come back again. Look, they're still holding the slower moving average. So you can't say, when we look at it, the way I look at it, you can't say, oh, yeah, I see they broke here, and now they're kind of running out of gas, and it looks like they're breaking lower here. They're holding above it, but they're really fading. It looks like it's like one foot in the grave, the other on the banana peel. It's not. We got the buy signal here. We took off. We took off further. Then we you see here we had like these gravestone dojis. We sold off a decent amount. They did come to this level, but the key thing is they held and they closed above this slower exponential moving average. Okay, there's your first test. So we take off again. We make new highs. Do we break lower and come down here and maybe still come back, but look pretty treacherous? No, we hold the slower exponential moving average. So there's nothing to tell you, oh, this is a great fade. And on top of that, we're in a Friday. So we have people that are stuck. So those people that are chewing on their nails, once again, it makes it better to put yourself in that person's shoes and saying, man, is this thing going to break or not? And then at some point they say, I got to cover. So that's what I'm saying. At least looking at, that's how I look at the markets, or at least I look at the equity futures. And that's what I'm saying about lots of times, although I put a little bit more time with the equity futures, but when I say I look at things, if I'm looking at it technically, I'll try and read into, because I will look at the indices, and I try and tie those into the futures. And I just told you, when we're looking at the equities, there's nothing that says, wow, we're really starting to take off. There isn't. So I think this is more that it's more about futures traders being trapped. But like I said, I'll look at things sometimes, or try to look at things dispassionately, in the sense to say, look at the levels and where would it go to? I mean, it's just the same thing. I did that simple thing yesterday, high to low, projected, boom, 12,000. That's where it can go to. And what happened? It went to 12,000, literally to the tick, and then before it paired back. But like I said, it looks like we'll come down here and looks like, man, they did get them stuck. Matter of fact, I'd even look at this in the early aftermarket hours, you want to call it, or whatever, electronic hours. And I was like, oh man, they really did come off that 12,000. But look how quickly they turned around and came back. And actually, it looked like a head and shoulders potentially. I even did a scalp here, and fortunately, I did not stay in it because you can see right here. It looks like here, and I even posted that in the chat room. And we started to break. What I didn't like, and that really helped me, is the volume was super low. And I'm like, this is not good. We should be seeing more stronger volume if we're going to pull back. Fortunately, I just got out literally with just barely a few ticks. I was kind of kicking myself because we did dip down here towards 1940, and then, but still the volume was light. And sure enough, we broke up here. We came back here. We come back here another high. So this, if it was going to fail, this should have been the area it should have failed right there. So you're like, okay, well, it didn't. We come here. They kind of screwed some people. We make one. This is where it should have failed if it was going to fail. And come down towards here. And look, we make another high. Now, we did put a little of this gravestone doji up here. I saw that here, and I myself had a chance like, no, I'm not going to do it because it's just sitting here. It's too quiet. It's into a Friday. I would gladly have taken it. It had been a Wednesday or Thursday or Tuesday. But you can see right here, eventually we broke, but it's not like this is a 1 minute chart. This is a 5 minute. You can see here, it's just barely dripping lower. Eventually you get a little bit of momentum. I'm like, no, I'm not here to go and challenge it. I still think that the equities aren't showing you that there's a real move. But right now, like I said, when I look at this from a technical standpoint, and I've been burned on Fridays, and I just explained to you, there's nothing right now that tells me, oh, you need to be short. I mean, we've pulled back a little bit, but you can't, there's nothing that I can, obviously, if you look at the exponential moving averages, we're going higher. Price is going higher. But what I want to see is, pull up the hood and see if we can see something. And like I said, on this first test, we broke here. You can see we've reached a pretty good high here. I mean, these gravestone dojis. So can we break? We break. Okay, we held it. Okay, big deal. You held the first test. They're going to buy it. Okay, no problem. We go to new highs. That was key because if we just sat here, maybe it kind of signifies this and that, but we barely took the highs out. So this is its chance for it to shine in the sun. We barely took out the highs. Now we can start to go lower. And what happens? We move lower, but it's held once again by on the second test of the exponential moving average. So I'm like, wait a minute, this is not good. This is not good at all. And now it runs right back up here. So you'd really have to see this thing really start to break and fail to say, wow, I'm seeing momentum change. Let me step in with a short and let me just put my stop above whatever. So that's what I'm saying. That's the way I'm looking at it. And it's tough on a Friday because, like I said, you can say, well, the Friday flows is 50 pips, I used to say. But the thing is, I think you got people that are really trapped here. Like I already explained that to you. The up, down, minor up, then wow, we really take off, and it looks like there's going to be some follow through, and there's no follow through. And now it has people stuck on the wrong side. So there will be some people. I wouldn't necessarily say that they're weak hands because we've had a pretty good run here, but there will be some people that's going to be forced out. And the market likes to force people out of their positions. So that's my concern, is that we will make a move, pulling up the 2-hour chart, to this 12,023 before it's said and done. And then we can see what the market's made of, and that would be the actual equities. I don't think we would see that until the morning. So that's it. That's what we have. Thanks for joining us here in the European Crossover webinar. We'll see you in the chat room.